Sailboat racing, competitive sport. It's like three-dimensional chess because
Okay.
you deal with the wind, the current, the competitors, the dynamics on the course, and the team around you. So we do this once a week, and then we do a whole lot of big races.
No kidding.
Around
So
the
actually,
world.
you dedicate a day, the weekend for that.
Yeah, yeah, yeah,
Do
yeah,
you have your own boat?
yeah. We have our own boat, and we're involved in a couple other boats. And we do ocean races, which is
Huh?
fun. So a couple days out in the ocean. It's really good for a mental reset.
Yeah, I can see that. And you're based in Maryland, so you have a little bit of a river and an ocean.
Yeah,
Yeah, I can see how the water and facing, well, cold water slash death can kind of
a
like
little bit.
shake you up a little bit and give you a reset and appreciation of life.
Yeah,
Uh,
when you're 400 miles offshore with no helicopter range in sight, no ship in sight, no nothing. It's different. It's different.
how many people do you need on your team to
It depends on the
navigate it and
boat.
to race it?
Depends on the boat. 4 to 5 on our boat. The Mildus 24. On the big boat, which is a foiling 52 footer, we need 13 to go sailing.
So, for just quickly, what are the rules? How do you actually race it? I understand it's a three-dimensional chess, but what does it mean? How do you cut? Who gives the right way? You turn, you come back. How does it work?
It's all highly based on the wind direction. So it depends how the course is set up. Ocean racing is usually kind of a point to point kind of race. So Newport to Bermuda is a good example. So you start in Newport at a racing starting line, and then you head out in the ocean and you race as quick as you can to Bermuda, depending where the wind's coming from.
Uh-huh.
So that's pretty fun. The other courses are usually set up courses, so you always have a what we call a windward mark. So you race up into the wind at an angle, and then there's a whole rule book that regulates right of ways and things like that. So
Gotcha.
it's
So,
helpful to
so
have
when
something.
we were kids and we said, I'll race you to the next tree and back, you're like, I'll race you to the next island and back. And first guy who's taking the left turn
Yeah,
against the wind, he's like the winner.
pretty. Yeah, whoever gets there first. Then you have a handicap kind of rating as well, because the boats are all different. So you need to rate them specifically to then determine who the eventual winner is.
Wow. Okay. Interesting. Yeah. I'll continue to be a land rat if you don't mind. I do appreciate people who like boats. Yeah, and that's basically it. Okay, good talk, and now we can talk about other stuff like insurance. No, that's perfect. So, you've been in the insurance industry and apparently in the sea for a while now. Um, how how did you merge them? Was that when you were in Munich Re, or was that a little bit before?
It was before. I've been in logistics and cargo and supply chain for 20 years or so. Had a couple of companies, did a couple exits, and kind of experienced the challenges of supply chain in
Mm-hmm.
general, especially complex supply chains, pharmaceuticals, refrigerated supply chains, etc. And the insurance component is a massive one that seemed to be unsolved for the longest time. And after my last exit, I took a consulting role at Munich Re for 3 years in their marine cargo innovation team to see the other side to the supply chain problem, and learned a lot of how insurance is managed, distributed, rated. How the whole back end concept, the other side of the coin, works inside and out, and between those two experiences, kind of said, we can probably do this a whole lot better. There's a better way to do this, and that's what started Redkik.
Famous last words, or
Yeah,
actually famous first words
yeah,
of any
exactly.
startup. But yeah, no, I can see that. We can do that better, and then you launch your next startup. But 2 steps back,
Yeah.
cargo. You were on the side of you had a few exits, and you're familiar with supply chain. What's the problem with insurance for people who manage supply chain? As you mentioned, perishables and medicine.
That the insurance is based on typically on large data sets and massive historical experience. So with supply chains changing, and all of this happened during COVID as well, which exposed the supply chain volatility in a big way. Insurance pricing and the ability to get insurance was just not fit anymore. I mean, it costs you to insure the same. The insurance costs you the same whether you truck a load from New York to San Francisco or from New York to New Jersey. It's the same thing. So as long as you have the same cargo on it, length of transport or risk probability doesn't really play into that whole aspect. Insurance, from the underwriting perspective, is pretty static because it's based on historical experience, and the underwriters have done it forever and they're good at it. It's just from the consuming perspective, it's not the ideal product. So you're really, as a consumer, you're finding yourself constantly being like, okay, why am I paying the same if I send a truck 100 miles down the road or 1,500 miles across the country? Like it doesn't make any sense.
It doesn't.
And we as a society have been extremely successful to cater to our instant gratification needs of clicking a button and getting everything. Amazon Prime, you click the button and if you're lucky, same afternoon your stuff shows up. So why would it be so difficult that I have to call an insurance broker who then, sends me a paper form to fill out, who then, if I'm advanced enough, I may fill out a website or I may send them an email form back, and then I play phone tag with the guy 10 times, and then a week later I get an insurance quote that is overpriced. So the mechanism just is not fit for the expectation of us as as people in general.
As a modern society and new ways relatively new ways to move goods from one place to the other. Because when you think about modern insurance, it started, we all talk about Lloyd's Coffee House. At the end of the day, that was cargo, marine and partially non-marine insurance that was all about, here is money on this boat. I hope it will arrive.
Yes. It's the oldest line of insurance, right? That's what started it, and it's people who, from an insurance perspective, companies are extremely successful doing it because they've been doing it forever.
Yeah.
And it's a really robust line of insurance, but it's also one of the most complex because the variability is
So today, are they just rolling the cost to the end customer? Because I'm sure that they are looking at it as a very big pool of risks and go like, we'll just cut it here in the middle or the median of the different policy and go like, it doesn't matter if you're going to be, as you said, what was it, 100 miles or 1,500 miles on a risk. Part of the pool, it works for us.
Yeah. So I mean, I also happen to have a trucking carrier at some point. And so I
Of course you
kind
do.
of confronted this problem firsthand. And you find yourself trying to make a decision of, you run a trucking company, everything is variable cost per mile, everything. Your truck, your trailer, your gas, your driver, tolls, fuel tax,
Everything is a
cost per
variable.
mile, except insurance. So now you gotta figure out, is my insurance cost, do I apply it on the projected amount of miles that I'm going to run with the fleet for the year? Maybe it's one way of doing it. If I know exactly what the business is going to look like, or do I just eat it as a cost of doing business? Maybe. I don't know which one is the right answer. We couldn't figure it out because neither really worked well for us.
Well, I can tell you that I'm married to a professor of accounting. Now, my dear wife, she usually teaches managerial accounting and from time to time financial accounting. And that's the big difference between them, right? And people don't appreciate managerial accounting until you talk about variable cost and
Exactly.
how you take that, which is the day-to-day managing your company
Yep.
versus, well, the different balance sheets and the financial accounting that we see at the end of the day. And the marriage between them, or the gap, or the translation, it's so vital to have a healthy and a good, efficient business to run. And those were my 2 points. Hopefully, of course, she doesn't listen to my podcast, but that was my, shout out to her and giving, the kudos and how amazing she is. And now we can go back and talk about your business.
Excellent. Excellent. Perfect. No, but that makes perfect sense. And that's at the end of the day, that's one of the big challenges in supply chain is how to appropriate the insurance costs. Because they're not nothing. They're a massive component of the overall cost structure. And if you're able to turn that into a revenue driver versus a cost driver, your your OpEx changes instantly. Instantly.
Now, is that Q Redkik, or are we not there yet?
Yeah, that's what we do.
Okay, in that
Yes,
case,
we do.
Gong, Q Redkik. What's
Yes.
Redkik? What do you guys do?
We built the part embedded insurance delivery proposition. So explaining, you go to Uber Freight, you schedule your shipment. There's a button that in the Uber Freight system that says, "Hey, for $30, do you want to apply insurance to your load?" And you said, "Yes, I do." You go check out within the Uber Freight system, and your load gets picked up, gets delivered, is fully insured, end to end, done. So we're that mechanism in the background. So we're that instantaneous delivery of insurance quotes, including all the sanction checks and the policy checks and all of that other stuff. And we do this in the embedded fashion within 500 milliseconds. So it's always in line of what you're doing anyways. So coming back to the original topic of training us as a human race for instant gratification, you don't want to wait 30
Yep.
seconds or 2 minutes for an insurance quote. It's just not good enough. So it has to be sitting there when you're making a decision how you want to ship your product and what you want to do with it and where is it going. And that we deliver that insurance quote back in a dynamic fashion as well. So we can we run risk probability on the transaction itself, and we know the risk profile, so we can price the insurance appropriately for the transaction. So that's one side of what Redkik does, and the other side is we run a lot of back-end policy admin systems, insurance systems for super large insurance brokers, super large insurance companies, MGAs, anybody who is doing the underwriting and needs a system to deliver that underwriting intelligence that they have in an efficient way to the customer.
Okay. So are you the MJ or just the technology stack?
Just technology stack.
So pure technology game,
Mm-hmm.
embedded insurance platform. You also host the underwriting or the pricing, or really depends. So you don't have the binding authority, but you're working with those entities that have the binding authority, so you can quickly generate, quote, bind the policy there and then, so it will be a pure embedded insurance play.
That's correct. That's correct. And we're
Perfect. Great.
completely
Again, it was
agnostic to any of the markets, to any of the brokers, any of the MGAs. We love them all, as they say.
so how does it work? Because you have the carriers, you have the MGAs, you have the brokers. Each one of them is a little bit different in the vertical, and it's a little bit of a different, how can I call it? incentive and go to market.
Yes.
How do you work with them differently and make sure that all the kids play nicely, or at least don't get upset?
Yeah. No. So we have our system is a multi-tenant system that essentially creates your own instance for yourself that you can manage within your guidelines. So that creates a value proposition that's targeted to each one of those subsegments that you mentioned. So the broker has obviously different interests in what they want to see, what they want to manage, whether they want to receive the first notice of losses or they want to receive referrals or not. The value prop is slightly different. The insurance market is again slightly different. They need to see aggregate exposure, they need to see risk profiles, they need to see some underwriting intelligence. The system, being multi-tenant, can target out of the single system all categories to what they want to be seeing and what the direct value add for them is.
Cool. Wonderful. So they proceed. Okay, done. I think that we covered the company, we covered the root cause, we enjoy the sport. Anything else that we should talk about insurance and what we can improve in that industry?
I think there's a massive movement towards more data-driven insurance propositions lately. I think you see this with a whole lot of MGAs that are really focusing on that area. You see it with the markets. I think the brokers are trying to trigger a different differentiator, especially around renewal discussions and automated data insights as the business develops. So, kind of running somewhat targeted loss ratios based on data and real-time data insights is super critical, and it's becoming more and more critical lately. And I think the industry is really looking towards solutions to help them manage that problem.
But how does it reflect on your business? I can see how you mentioned that you're hosting the different quoting engines when it's needed. So, okay, so you will have the dynamic. And who is working with the regulator, or you just bring me your Excel sheets, I will figure this out?
Yeah, bring me your Excel sheets, your PDFs, however you put your rating structure together, doesn't matter to us. And then we create rule sets in our system that are then accessible by the underwriters. So we kind of set the system up for them, and then they have the authority, because we don't do that, but they have the authority to change the pricing, the deductibles, the execution rule sets in their instance. So, but from a data perspective of what we're starting to see is that everybody who is on the network in the system or on the ecosystem can opt in to participate into anonymized data trending. So we can say, this warehouse across, 10 different carriers, trucking carriers, 12 different insurance companies, 3 different brokers, has isolated instances of claims, call it shortage on a Saturday morning, from JB Hunt, from Uber Freight, from whatever, Ascent, from Warner, from whoever else is delivering to that isolated warehouse. For them, it doesn't make a difference if 1 or 2 boxes is damaged. That just happens but it's part of doing business, right?
Mm-hmm.
If you look at it in an aggregated fashion, all of a sudden you're like, oh, you know what? From 8 to 12 in this warehouse, we have 37 claims. That's a problem. So you can start really quickly pinpointing issues in the broader supply chain. And that becomes interesting.
I love that. Well, you have the site of all the aggregator of the different policies, different carriers in this case, and talk about, okay, here we have a problem that is mutual for all of them. Let's understand the root cause.
Exactly.
And get someone needs to kind of volunteer to be the head holder, and it's like, let me check it out, right? It's like assigned external TPA that the ad hoc consortium decided that we're going to pick them to go and investigate.
Yeah, exactly.
It's a very interesting approach in terms of the technology that you are applying, and let's call it your expertise in that specific line of business. One of the last episode that I haven't published yet was with Dan Wood from Socotra, and they are a pure policy administration, hardcore technology from the start. That's their call to glory, right? Working and selling that policy administration, a very robust and quick to create new policies. And it's very interesting, while it sounds almost, same technology, which is not, because it's completely a little bit different in terms of that, but it's like, yes, we have the underwriting, we have the pricing, and what you have, and then the embedded insurance. Everyone has a little bit different, but but what I find fascinating is that you managed to carve your niche and line of business and to be extra specialized in that specific. Maybe the underwriting is not as good, or the hosting or the scalability, not the underwriting. The underwriting is not your responsibility. It's the speed to market or whatever that may be, but having the ability to specialize and have the understanding of a specific line of business, and then apply that, and then think about what other data, what can we do with the data? It's and especially the insights of being a specialist and an expert in the field. That's
we've ran the numbers the other day. Our system in the last 2.5 years quoted insured values north of $14 trillion. So
that's a nice number to have.
It's remarkable. It's remarkable the amount of interaction we see with the general shipping population, and it's really wild. And those data sets are becoming relevant, right? Because all of a sudden you can see very quickly. We have a system what we call ALARM, active loss ratio management, where we see every month. We run it for our specific accounts and across the network, and we can say, oh, you know what, this zip code or this warehouse has higher loss frequencies this month, or this route, or this commodity, or this trade lane, and we can see that. We can see that quickly, and we're in the process of commercializing that alarm mechanism as well for all of our customers. Right now, it's kind of a we run it for Uber Freight all the time, so they're starting to get really interesting insights into that business. But it's kind of the next version of data-driven intelligence, so you can really clearly see what's going on.
Oh, you just answered my next question, which is what's next, right? Like you're already having you hosting, you're embedding it, which is the most, I think that especially for young MGAs and stuff like that, the embedding insurance and owning the distribution channels. And here you are actually another intermediary who owns the digital distribution channel and having that digital real estate, and then the data, right? So and then you ask us, okay, great. What's next? And having smart alerts.
Yes, and so we do own a global patent for risk probability based insurance pricing.
Interesting.
So, which means that if you start seeing risk behavior changes based on storm, weather, traffic, whatever patterns, right? It's totally irrelevant. And you start adjusting the insurance price for that to actually cover the actual risk, not just a broad scale of assumed risk. We are commercializing our AI based on our patent around that for our underwriters.
Yeah, we have now the perfect example. War in the Middle East. The Houthis have been shooting missiles. Iran wanted to close the Hormuz Strait. Instead of going straight towards the Suez Canal, You need to go around Africa. The main impact is on the European import business. What happened there? Not what happened. How did that? It's still ongoing, actually.
It is.
How does it affect the insurance?
So with the insurance is affected by longer transit times, longer wait times, higher aggregation in ports all over the place, which changes the risk profile dramatically, right? If you have 1,000 ships sitting in the port of Singapore versus 20 ships sitting in the port of Baltimore, it's a different risk profile, right? Here the ship sits for a day or two, fine. Over
Yeah,
there,
but in Baltimore, the most dangerous thing that can happen, it will be a bridge.
correct, which is not cheap. I
No,
heard to crash down a bridge.
no, it's like give a billion here, a billion there, but
Yeah,
it's like I know the investors will be more than happy to invest in that 30 years and uh, let's build a new bridge. But jokes aside, let's go back to how war impacts
yeah,
insurance.
yeah. So in every insurance entity has war rates, right? So currently war rates are applied primarily manually or after the fact. There's a condition in the policy that says if you are going through a war zone, we will then retroactively apply X% war rate upcharge. Makes perfect sense, fine, and it's the way it's always been done. But what every insurance entity is missing, they don't know where the ships are actually going. They have no idea because nobody tracks that, right? So you need to combine the application of the insurance pricing that the underwriters are desired to have with what's actually happening in the real world. And then you can build in mechanisms to say, if you go this route and we're going to track it, your war rate is whatever, X% on top of your regular rate. If you go around, because we want you to go around, we're dropping the war rate and maybe we'll give you a different rate as well. So your insurance cost overall drops, which may or may not offset the longer journey times, etc. But you're starting to see how insurance pricing can affect supply chain movements.
And you roll it, and usually you will roll it at the end,
Mhm.
customer or consumer. And with inflation, it's just another
Yep.
kick up for the prices.
Yes. Yes.
Now, you said something that actually, I don't know if to call it amazed me or something like that, but surprised me. Surprised me. That would be the better way to describe it. It's like you don't know where the ships are going. I know that for airplanes, every plane where it is, they all have sensors and transmitters. You have so many websites, that radar, whatever, that you can track the different. I was sure that same thing applies for boats
It's
and
true.
ships because
It does. It does. But what's missing is the connection of which ship has which insured cargo on it,
okay, gotcha. Okay,
right?
so the cargo is like, where the hell is my crate? That's a
Well,
question
and
because you have
who's insuring
thousands
it?
of them and they
Yeah.
may be on this container or another one.
And who's insuring it, right? So, because a million insurance companies are insuring, the 10,000 containers that are on the vessel Emma Maersk. Like that complexity of which insurance companies on risk for which vessel, which container on that particular vessel is missing. So
Hmm.
that's really difficult for insurance companies to get because it's a whole lot of manual effort unless you use an embedded system where the booking of the container onto a vessel is automated and it gets pulled out of the transportation management systems or the vessel booking systems. And then you apply the insurance at the point of sale. Now you have that information. Oh, my container, whatever it is, 12345, is on the ship, the vessel Emma Maersk, which has done the sanction check, is going from whatever, Hamburg to Singapore. So that has not been done before.
Well, how are you going to keep on developing your stuff compared to the development in a supply chain?
I think we have we have so much involvement with all the all the players in the in the various fields, from the supply chain guys, from the broking guys, from the insurer guys, the MGAs, and we're actually regularly bringing all that feedback in to drive our development pipeline. Where we have some general ideas where the product needs to go, and we built it in such a modular fashion that we can add, accessorial services to it without much problem, which allows us to be very flexible and quick to market requests. So, rolling out super large insurance brokers around the world brings a lot of input into the product, as you can imagine.
Yeah, no, listen, that's what I love about it, because, it's in insurance, it's like, oh, it can be at the beginning very territorial. Oh, I'm focusing on the US, or I'm launching from this state to that state. But in a sense, it's you need to be from day one global. While you are providing services embedded in insurance, if it was Uber Crate,
Uber Freight.
Crate?
Yeah.
Freight, sorry, Freight. Crate, I don't know why. But the supply comes from everywhere and goes to everywhere.
Well, and insurance is a global business by default, right? I mean, you take the brokers; they're all global. That's how you scale it, right? It's and that creates the visibility that you're after is only achieved by being fully global. You can't just black out a continent. It doesn't work. You're missing too much data in between.
And my point is, in all this global, is that you define, this is the line of business. Mm-hmm. It's a niche, and I love to add the air quotes here of a niche, but it's a big niche. And you can still grow in that niche. And I see a lot of different decks that, talk about the TAM, the SAM, the SOM. It's like, focus about the SOM. I don't really care about the TAM, because if you'll tell me that the insurance industry is $6 trillion, I don't care.
Yep.
Tell me that, and tell me about your specific niche TAM, which will be, how much is it? 50 billion in terms of what's the size?
Yeah, premium. 50, 70 billion in premium.
Yeah, which is not what you're going to make, right? But so you're going to focus on the specific conduit that you're providing, given the different places, and then later on you're going to add all kinds of extras to it, and that will be still in the 9 figures, and we'll do, if you get 100%, as we like to call it, like, I don't mind to be in the insurance industry and have 5% market. It's still 9, 10, 11 figures. It's like, I'm good, I'm happy.
Yep. And we find ourselves super fortunate that we were able to sign some really big players, which give us very large market share fairly quickly. So that's that comes back to kind of the insurance industry moving as a whole from one tech to the next. And the last time they did this was 25 years ago, and they're all on the same tech.
Yeah.
They're all on the same tech.
Yeah,
and
course.
So now they're moving collectively again to the new tech, which is a phenomenon to watch in an industry as big as insurance. It's crazy.
Chris, sadly, I need to start wrapping up things here now. We already passed the 30 minutes mark, like 8 minutes ago. And because I have other meetings, I need to start. So let me ask you the last question. Can you give our audience a story, or let's call it a word of advice, about a failure that you had and the lesson learned that led to a success, or just a lesson learned from your experience in the past 20 years in insurance and car?
I would say control your people, especially your finance people.
That will go to anything which is not just cargo
No,
or insurance. But yeah,
that's
okay.
right. That's right. That's right.
What happened? And that was the punchline.
Yeah.
What happened? What led to that?
No, one of my trucking carrier was the guy who ran the finances. Literally ran away with the finances. So that was
Hmm.
a slight issue, as you can imagine. So too much trust is never good. So kind of make sure you can keep control over core things that are dangerous to the business if they don't work right.
So how do you balance it with delegation? Because now we always talk about if you need to scale your operation, you need to delegate responsibilities. So for you, I'm sure that that's something that happened many years in the past. How did you apply that lesson in other later companies, this one or the one before, about delegate and scale, and then having a control or some sort of a supervision?
Yeah, we do. I delegate a lot, except super core functionalities that I have direct report to me. Like the finance guy can't make any decisions unless he talks to me about it,
I see.
which makes sense. But he does everything else. So it's like all the accounts, the cash flow management, all of that. It's like, okay, well, let's talk about it once a week. This is what's going on, so we're all on the same page. And then my COO, who I trust fully as she's my wife, she then executes whatever need executing,
Yeah,
and that works really well actually. Then the interests are aligned. Plus, I have most of the people that are at Redkik have some kind of ownership as well. So their interest is aligned as well to make the company successful.
awesome, great. Now I think making sure, which is derivative of that, and another part of organizational structure and how you set it up for success is aligning incentives. It's super hard setting up incentives, if it's for executive or even for the most basic worker.
Hmm.
It's not that simple. If it's one function, it's like your job is to take this cargo from point A to point B. I incentivize you by paying you for your time or something else. Also, usually the incentive comes, or the motivation is like, what do you do when shit happens? Taking it from point A to point B is simple.
Yeah.
Like, here is, I don't know, by the hour or whatever, you know better. But what happens if they are not there on time? There was an accident, God forbid, or something else, or the mammoth or the wolverine that you have in your cargo is breaking loose. There are so many, but sadly, I need to jump on another call. Chris, thank you very, 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 very much for your time
This was
today.
fun.
It was a pleasure and a lot of fun.
Absolutely. Thank you so much. I appreciate it.